When IBM reported this evening, it beat the bottom line, but the top line failed to best most of the street's estimates. Given the stock is up 27% for the year, you can expect some profit taking, but there's still a lot to like, including the 4 1/3% yield and the upcoming closing of the deal to buy Red Hat, one of our favorite cloud kings. So let's check in with Martin Schroeter. He's the Senior Vice President for IBM Global Markets to learn more about the quarter and where the business might be headed. Mr. Schroeter, welcome back to Mad Money. Martin, I don't know what to do because I love the earnings per share beat. The gross margin is terrific. Your cash flow much better than I expected. But people are going to key on the revenue line. What do you have to say to people like, look, don't worry about the revenues? Because we know technology, we always have to worry about the revenues.
Yeah, look, so, I mean, obviously we want to grow revenue, right? That's pretty clear. And our business model says we should grow revenue. But we've also been really clear and we've been really focused on making sure we get growth in the right places. So if you look, for instance, just at the first quarter, really good growth in cognitive cloud software, again, really good growth in GBS, right? The systems business improved from a trajectory standpoint, but there's a product cycle in there that probably I'm not too worried about. And let's talk for a second about GTS, right? So that's a big services business. Okay. And this is where we've always said we want to get growth in the right places. Right. So we didn't see it in revenue this time, but we did see it in margin improvement in GTS. So overall IBM margins were up. As you said, we like the margin story too. Overall margins were up, but we've been very selective about our global technology services business and where we're placing our bets, and we want to make sure that turns into high margin. Okay, I like you placing your bets in the strategic imperatives vision that you have, but I was surprised. I know some investors didn't seem to want it anymore once you got to 50%. I always liked that. From the day I met you, I always wanted to know whether strategic imperatives would be 60% or 70%, but you discontinued talking about it. Well, so we put that in place 2015, right? When we said, when the business was about 25% of that kind of a content, right? And at the time, the discussion we're having with our clients was, you know, give me productivity in this part of our business and then help me reinvest. And that's what the strategic imperatives represented. Now, at the time in 2015, we said by 2018, this will be $40 billion and about 40% of our business. Right? We hit the 40% a long time ago. We hit the $40 billion at the end of 2018, like we said. And now our investors are telling us, look, what we really want to do is we want to understand the cloud story. We want to understand the as-a-service story. Strategic imperatives, we understood that. We followed along with the progress. But right now, it's really about cloud. And it's about as-a-service. So that's what we focused our disclosures on. Obviously, we run a set of segments, but we supplement that with the cloud story and with the as-a-service story. I'm going to focus on that for myself. We were quite enamored of the Masters app. And I know that sometimes you run a lot of ads, but to me, the greatest ad I've ever seen was what you had. Is that a cloud-derived strategic imperative that produced, I thought, maybe I watch all the apps, what I thought was maybe the best ever? Yeah, so I'm glad you appreciate it, by the way. So I think there's a real lesson in here for what we can help our clients do, both from a security standpoint. So we monitored 150 million or so security events, which were actually about 1 million real attacks just during the Masters, right? Now, what, 1 million attacks during the Masters? Just during the Masters. So we monitor 70 billion events a day across our networks. So there's a security element of this app, which is I think important at scale. More importantly, though, I think what the Masters app is a really good demonstration of how AI can be used to help drive an enterprise. So I'll give you an example. We introduced already last year this idea of a round in 30 seconds, a round in 3 minutes, right? Round in 3 minutes. When we did it last year, we could follow 10 golfers, and it took hours to put that together to get it out on the website. This year, with the help of our AI, we collected all that information on every golfer, and everyone was done within about an hour. So about an hour after they finished their round, we could take their entire round. We could figure out with analytics what was the real round. So what it says is when you're trying to serve your clients, and there's nobody more focused on serving their patrons than Augusta and the Masters. When you're trying to serve your clients, you have to find new ways, and you have to use AI to do that. And this is a really good example of how you can do that in a very productive way to serve your client base. All right, so let's drill down some other things. I like the IBM that is growing. You know I'm a big fan of Red Hat. And boy, I got to tell you, people laughed at that price. But then you look at all the other cloud kings, and now Red Hat's the cheapest. But I didn't see much other than it's going to close in the second half. And second,
Why are you still buying back stock? I just want your balance sheet to be good and invest in Red Hat.
So a couple of things. I mean, Red Hat, as you said, it is like the gem in this space, right? So Red Hat makes money.
I've liked it from the day that Whitehurst got there.
So Red Hat is a great acquisition. We're still going through the regulatory process. So hopefully in the second half, as we said, we'll get that done, and then it'll be part of us. So they make money, right? So while we haven't paid for it yet, so while we're in this position, we can still continue to return capital to shareholders. It's always been part of our model. But we've also said that once we close on that, then we'll pull back on share repurchase, right? We'll keep paying the dividend, but we'll pull back on share repurchase. So and that part of the model is, I think, is the right way the right thing to do. From a what's next in Red Hat, I mean, we really did see, I think, the beginnings of some really positive things. Now that we've reported, Red Hat's reported after the announcement of the acquisition. They had a good quarter. They had a very good quarter. Yeah. And when you look at the parts of our business that did well, our hybrid cloud business grew. It accelerated, right? And GBS and the work they're doing to help our clients move onto the cloud in GBS is growing 25%. So it's a very good story.
But please, for our viewers, Red Hat to hybrid cloud is kind of something that is in their DNA. So this is going to be very, very synergistic.
Right. So when we think about the world of enterprise technology in the future, it is hybrid, right? Hybrid. We've said that for a long time. I think others who were competing against are starting to say it's about hybrid as well. In the hybrid world, Red Hat is that open operating system that sits on all of these clouds. So the reason Red Hat has such a bright future is because they are the #1 operating system now. Linux is #1 in the data center, and they are #1 in Linux.
And we understand they're not necessarily going to steer everything toward you. That's very clear. No. And that they are a bit of more Switzerland than IBM's used to. So will Jim from Switzerland stay with IBM?
Well, we've already said, and Jim's already said that he's going to run.
He said it here.
He said it here. He's going to run.
I wanted to be sure.
He's going to run Red Hat, and he's going to report to our CEO. So so there'll be an entity within IBM. Jim and the leadership team will continue to run Red Hat.
One last thing on the revenues. Any area that was weaker, Asia, Far East, because I did expect the revenues to be a little bit better.
So yeah, I mean, yes, there's a geographic element to this, but look, I'm the sales guy, so I was in the middle of all these deals, right? I would say it this way. Our clients are, they make big commitments to our platform. They're making big investment decisions. And when you do that, it doesn't necessarily suit a 90-day period. It just doesn't.
Banco Santander does not go by 90 days.
Right. So for us and our teams, obviously our clients are thoughtful, trying to make sure they're doing the right thing, getting the right deal. We're also, there's an ability for us. We can close deals much, much faster, but we wind up giving something away. It doesn't make sense, right? So again, I'm the salesperson. I'm in the middle of these deals. I know my sales teams. Yes, some deals. The phenomenon I described happens in different places. It happened in Asia this quarter.
Okay.
So all these deals are in play. They're all being worked now. We will get them done.
All right. Thank you so much. That is Martin Schroeter. He's IBM's Senior Vice President of Global Markets. Some very exciting things here, but I know if you focus just on the revenues, you'll be a little bit disappointed, but there are other things at work, including Red Hat, one of my favorite companies. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.